Thank you for tuning in to another edition of the Vulcan Report. This end of day report is trading on Wednesday, October the 18th, 2017. Jumping right into it, our example for the day, chart of the day is Nvda. Here on the weekly chart here above you, you see that this week the market hit a new high of $198.90. Now, I have been calling for $200 Nvidia since it was way back here. And as you can see, we are within a $1.10 of reaching that goal. Can it get at least an intraday pop or spike above 200? I think that's possible before all is said and done. Now, coming into today, the weekly post wave price triggers predicted that today was going to be a crash alert. Crash alert. We entered into the day with a crash alert, as you will notice on the in play tab of the weekly post wave price triggers, which are updated daily. You notice that there was a 9/11 crash alert warning you that there was going to be some powerful selling entering into the market. Now, just looking at this weekly chart, you see nothing of the sort indicating any type of selling. Remember, this bar didn't exist, only this one did last week. On the daily chart, same thing. We've gone straight up. There was nothing on the chart indicating any type of selling. All right. The power of the pulse waves and the algo sets is what I look at. Looking at just a chart is one thing, but what's behind the scenes is what you cannot see. That's why I stick to the algos. The algos warned of what was coming. Today, what did we see? This market pulled back drastically. Look at this. It opened at $198.11 and immediately crashed to $193.32. Today was a stop run, ladies and gentlemen. The market quickly reversed, and now you have a spike, an intraday spike, okay? And you've now created a pointer on the daily chart. And you know what that means. So either we're going to make another run up toward that 200, try to at least touch it intraday, if not close there. But at some point, I see us coming down to test this level here. Notice how it ran, the market ran and touched this momentum line and then quickly reversed. All right. So right now, everything is still intact. However, the algorithms are screaming. Once I finish running them tonight, we will see what is in store for tomorrow. So you don't want to miss tomorrow's pre-market pulse scan. It's going to be very interesting, I'm sure. So Nvidia, had you taken today's short signal in the Nvidia, you would have realized at least a $3 profit on this trade. And then you would have quickly gotten out and stood aside waiting for the next signal. That is what you get with the price triggers. It gives you what you need to know when you need to know it, and the market decides what's going to be on the table. So that's just how we roll with that. Let's take another look at what happened in the metals today. Also very interesting. All right, as you can see, gave up this weekly momentum. All right, still have time to gain it back. You have tomorrow and you have Friday's close. This is where you are on the daily chart. This little blip right here. This is where we're starting tomorrow's session. But as you can see, the market has come off drastically. All right, if I can bring this back here, let's do that so we can get another look at this. right. All right. So you've come down here. You have this downtrend channel in full effect on the daily chart, but then now the market's bouncing off of this low. All right. So you have a situation where the momentum is pointing downward. It's coming off. It's lost some of its velocity to the downside, but nevertheless, we have a top, and we're experiencing the tragedy of the Kumo cloud of death. So prices tend to whip all around. Now, we got a slight close below the Kumo cloud yesterday. So, and yesterday meaning today, earlier, and now the market is already into tomorrow's session. This is this right here. So chances are it's going to get back into the Kumo cloud of death and then run back up the top side of the Kumo cloud of death. You're just going to get this whip around, spikes outside the cloud, spikes above the cloud. Until you're 100% clear of this cloud, anything goes. All right, so the only thing that's really working in the metals right now as of today is just, micro shorting opportunities. That's about it. So from an intraday perspective, uh, your downside right here has been limited, but you were looking at least a $4 trade today from the intraday price inflection point. So that's just the way it is. And technically speaking, the system is staying short until stopped out. So that's just where this is. So it looks like more downside momentum is coming. All right, because this thing is locked in. So we'll see if we can get a change here by the close of Friday. Silver is operating the same way, but it's happening outside of the Kumo cloud. Now, the markets did recover off the lows of this session, but even still, the positioning of this is very, very weak. We have to admit that. It's very weak. This is not what you like to see here. Not at all. All right, this is what we don't want to see on the chart. All right, so here it is. This is also in the Kumo cloud of death on the daily chart, and you just whip sawing around. So you're going to be long, short, until this price action gets outside of the cloud. Unfortunately, that's just the way it is. It's how price action works. GDXJ, let's see here. All right, so the price action so far, market is gaining downside momentum, which is what we were afraid of as the market was behaving at the bottom of the Kumo cloud on both the weekly and the daily charts, as you can see here. And it's gaining that downside momentum. It is falling off the edge of a cliff right now. All right, and that is unfortunate. It's just showing that there's just a lot of problems with this. We were hoping that it could gather some legs here, but it looks like the retracement from the bear market lows is over, and the market now is ready to possibly lock back in. Well, why do we say that? Well, because we had a red alert today. Had a red alert in that negative momentum column. All right. So that was telling you that the trend is ready to switch to a bearish one again, and that's what this is looking like. All right. So what about Bitcoin? Bitcoin recovered a little bit too. Here's the GBTC. All right. Here's what the weekly still looking like, as if nothing has happened. Here's that daily. You can see the market has recovered. All right, we got green on the screen, so it's paused. All right, it's trying to deal with this Kumo cloud of death. All right, still consolidated, but it's trying to put an end to the downdraft, but still directionalist. But closed off the lows, so you have to give it props for that. All right, let's take a look here and see how BTCS is tracking. All right. And as you can see here, it's also at the bottom of the Kumo cloud of death, which is what we don't like to see. And this is the fourth trading session in a row where prices have been drifting lower off the spike highs. All right, you had a spike high here on the 13th, and this is happening below the Kumo cloud. So as prices find some kind of support around here, you could see it getting back up into that Kumo cloud at some point. You know, we're coming back here. Doesn't mean you can't fall off the cliff around here. This is a danger zone that you're getting to. But because Bitcoin is so volatile, chances are prices will recover on this one. So we will see. All right, what else do we want to look at? Let's take a look at the Dow as it's hitting new all-time highs. Everyone's clapping for the Dow. There seems to be no end in sight for this train. Now, I will say this. The media has been talking about crash this and crash that. Lately, they've been putting up, clips of the 87 crash, 1929 crash, all these different famous, milestones in the Dow from years past. But the point that they're missing is that the Fed is 100% in control of these markets, and algos have taken over. We're all digitized and computerized now, unlike 1929, unlike 1987, which was the very infancy of what was to be later known as what we have today. So the groundwork was being laid back then. So there's a big difference between back then and now. And when the switch is pulled, it will be done by one of them on purpose, unless the market signals otherwise. Right now, this thing is just super stretched out, elongated. You're in a runaway parabolic market with no end to the upside in sight. And I think it's going to catch a lot of people off guard. The only thing you can do is buy the pullbacks, because this is a runaway parabolic bull market. And the truth of the matter is, it's still in its infancy. I don't think we've seen the bull yet, to be honest with you. The bulls of the past didn't look like this. This is just some long, stretched out thing. That's all this is. You can't find a spot on the chart that looked like that. All right? It's more so like this, not like this. Look at this. Narrow range trading days. It's almost like someone cut and paste this and literally manually created this. This is just extremely narrow range days. And I don't want to hear, it's the summer. Nope. I've seen all types of actions and stuff during the summer months. So that whole thing, selling man go away, died a long time ago. Died a horrible death. Sorry you missed the funeral. But this right here, you guys, is manufactured. Just so you know that. All right? This is not normal. This is normal. This here, these bars are normal. Even these bars are normal. This is what the market really looks like, folks. All right? When you have real participation going on. You got some range. And these are weekly bars too, by the way, folks. These are weekly bars. These are weekly bars. How do you have no trading range whatsoever? How do you have a 20 and 30 point trading range? Come on, people. Not even a 100-point trading range. Come on. You know that's not normal. This is in a week. Look how narrow these things are, folks. Come on. This ain't normal. And here it is, mid-October. November is right around the corner, smiling at us. And this is the kind of market you got? Something's very wrong with this picture, ladies and gentlemen. But subscribe to the weekly post-wave price triggers. I'll keep you up to date. You'll know before everybody else when the top is in. You will know. Without it, you're not going to know until after the fact. All right? And I'll do my best to keep everybody abreast with the pre-market poll scans and the end-of-day reports. That's the best I can do to those who are not members of the premium trading room. All right, so just wanted to show you a few things that's been on the radar so you can take a look at it. Also, you need to take a look at how XIV has been behaving lately. It's starting to pull, give me some warning signs here. So, not saying that the market's, has topped out. I'm just saying they've been getting some warning signs. The same signal what I got for Nvda, I also got for XIV. Now, XIV hasn't manifested yet. But when those signals come up, I can't ignore them. I have to at least look at the early warning signals that the markets may be exhausting themselves. So, I give it to you raw and uncut, uncensored. So it is what it is. All right, take it for what it's worth. This is where we are. Okay, you see it right here. Very narrow range trading, and it's possible the market could be running out of steam. We'll see. I'll keep you posted. With that being said, postwavetrading.com. Come learn how to trade these markets. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.